I think you want to do that internet research to find out, who are the venture funds that have invested in a certain space, right? And then from there, you want to kind of drill down to, okay, these 20 firms invest in let's call it e-commerce, and invest in e-commerce. Which ones of these don't have a company that, I would view as competitive to my business? Because most of the time, venture firms are not going to invest in multiple companies, that are doing the same thing. It ends up being a conflict of interest. And so from there, it's like, okay, well, how do I get in touch with them? And that's where it can get a little tricky. Some firms will only talk to you if you know someone in their network. So that's when you go to LinkedIn or whatever, and you figure out, where's your connection there, and you try to get that warm introduction. Other firms like ours, we have on our website, there's a portal for you to enter your information about your company and add your pitch deck, and we'll look at it. We'll look at it and we'll get back to you as soon as we can, to either schedule a follow-up conversation to learn more, or to say, hey, we looked at it, thanks for thinking of us, but it's not the right fit.
You're listening to the Black to Business podcast, an educational podcast providing Black entrepreneurs with the tools and resources to start and grow their businesses. We chat with vetted Black entrepreneurs, thought leaders, and business owners as they provide tips and resources to help take your business to the next level. I'm your host, Monique T. Marshall.
There are several ways to fund your business, including bootstrapping with your personal funds, but there's also a way to use funds from others. Why not? So today we want to break down one of the most common ways that people fund their business outside of themselves, and that's through securing venture capital. So one of the very important things to us at Black to Business is to educate you and properly equip you with the tools and resources you need to make informed decisions. With that, I'm sure you've heard about venture capital and seeking outside investments, but today we want to really break down what it all means, like understanding how venture capital works and the different types, as well as which types of companies should seek venture funding, and so much more. Joining us today to help break down the ins and outs of venture capital is Marlon Nichols. Marlon is a founding managing partner at Mac Venture Capital, and he has an extensive background in technology, private equity, media, and entertainment. We invited Marlon on the show because of his experience and track record in capturing many high potential investments with some popular companies you may have heard of. We're diving more into his role within these companies during our conversation, as well as what happens after receiving funding. So let's go ahead and dive in. Before we get into today's episode, I want to announce that we've reopened the applications for our directory, The Connect. We're looking for businesses that provide professional services that will be beneficial to our target audience of entrepreneurs who are in their startup journey. So if that sounds like your business, you may now submit your business to be listed by visiting blacktobusiness.com/theconnect. Applications are open every 4 months, and we're now accepting applications for businesses for 2022. So to give you a little more information about the directory and how you can apply, the reason we created the Connect is to provide business owners with the resources needed to grow their businesses. And being that Black to Business is a platform that assists aspiring Black entrepreneurs with the tools and resources to start and grow their businesses, we are often asked for recommendations for industry experts who can assist these entrepreneurs with their business needs. So we wanted to create a solution. We want to include businesses who are doing the work. And if that sounds like you, we want to help promote your business to assist you in increasing your exposure, but also letting people know about the work that you're doing to continue to push forward Black-owned businesses. So head over to blacktobusiness.com/theconnect to apply. Now let's get into the episode. Marlon, welcome to the show. Thank you for being on the Black to Business podcast. Welcome.
Oh, thank you. It's a pleasure to be here with you.
Of course. So before we get started, I always like to ask for my guests who are not, well, audience who are not yet familiar with you, if you could just tell us a little bit about you, who you are, and what is it that you do in your business, and how did you get where you are today?
Sure. So my name is Marlon Nichols, and I am co-founder and managing general partner of a seed stage venture capital firm named Mac Venture Capital. We have a presence or we're based in Los Angeles and the San Francisco Bay Area. And we invest in tech and tech-enabled startups and try to help them to grow into significant companies. So that's what we do. How I got here, I studied management information systems in undergrad at Northeastern University in Boston, and then joined an enterprise software startup that I helped to scale into the UK and Europe before we sold that company to SAP. And then I started my next career, which was in consulting, first doing post M&A integration work, and then strategy consulting for media and entertainment companies like Warner Music and McGraw-Hill, etc. Ultimately decided that consulting wasn't for me, and I wanted to pursue a career in venture capital. So I went back to business school at Cornell University, where I had the privilege of being the school's CEO for their pre-seed venture fund for a year and a half of the 2 years that I was there. And I graduated and joined Intel Capital, which at the time was the largest and most active venture capital firm in the world. Basically learned how to do the business of venture capital there before deciding to leave and start my own fund.
Awesome. Thank you for sharing that story. And I'm very excited about today's topic because our audience is of those who are starting their journey or a little bit in their journey of entrepreneurship. And I know a couple of people are listening and they're interested in getting funding. So today we're talking about the ins and outs of venture capital and really understanding what it is, because this is something that we don't talk about a lot. So I thought that you were the perfect person to discuss this with. So let's start with the basics, like diving into venture capital. If you could define and discuss what venture capital funding is and how does it actually work?
Yeah. So it's a trade essentially, right? I am providing a company with capital or funding money in exchange for a percentage of ownership in their company. And for those dollars, or coming with those dollars, are the support from my team, which comes in the way of introductions to other businesses that could be helpful to growing this business, or it could be to helping them to recruit talent that can take the company to the next phase. It could be around just having conversations and strategy sessions on how to better operate the business and scale it. A number of things, right? Basically, I've become an extension of the company's management team, not operating per se, but as kind of an advisor to that management team to help them get to the next stage.
Perfect. So one of the things that you mentioned is, of course, the percentage of ownership. And I want to talk about and how you come in and you basically are like advising and things like that. So I want to talk about more of the benefits. If someone is interested in going this route, what would you say are the benefits? And I know when people think about percentages of ownership, they get a little hesitant. So if you could just break down, how does that work and how do you determine the percentages as well?
Yeah. So, I mean, first of all, we should probably start with saying that venture capital financing is not appropriate or fitting for every business, right?
Right.
It's really only for those businesses that have the potential to scale very rapidly, and to scale up to a multi-billion-dollar, initiative, right? So we're starting there. There are a lot of great businesses out there that are able to generate maybe tens of millions in revenue per year, but that's the height of their growth trajectory. That's not a venture capital business or backable business. right? Businesses like Apple, Facebook, Google, those are what you would think of as venture backable business, right? Businesses that, again, scaled up rapidly and are now valued, over $1 billion. So if your business does fit that, then what you have to ask yourself is now the right time to seek venture financing. And how do you make that determination? I think there are two real reasons why you would scale or why you would take venture financing. One is that you actually cannot grow the business fast enough without this capital infusion, right? So maybe you need to hire more salespeople, or you need more engineers, or whatever it is, more R&D, whatever it is. You're not able to build the business fast enough to capitalize on the opportunity in front of you. And the other thing is, you actually need the capital to build the technology, right? Or the infrastructure. So more of a CapEx play. Those to me, are the only reasons to raise venture financing. Because the trade-off is, as you said or alluded to, is you're parting ways with some ownership, right? So when you start a company, you and your partners, co-founders, you own all of it essentially, right? Once you take on venture dollars, now essentially you're taking on another partner. It's not an operating partner, but a partner nonetheless. And at the seed stage where we participate, initially, you're parting ways with about 20%, 10 to 20% of your company. Then you go to Series A, it's probably another 20%, and then the percentages start to get lower after that as you raise additional funding rounds. And so with ownership comes control, right? So whereas when you owned 100% of your company, you could solely make all the decisions, right? Should we take this loan that's above this amount, right? Can we pivot the company, and we were doing X, now we want to do Y, right? That's kind of a big decision, right? And your investors are going to want to weigh in on that. Should we take on additional funding, et cetera, right? Those are, do we want to sell the company? Can we sell the company for this price to this buyer, right? These are decisions that you now have to make together with your investor, right? Should you take on that venture financing? So you're parting ways with some of the control that you had before. You still, are in charge of the business. You still run the daily operations. Like, you're still scaling it and growing it. It's still your company, but you have partners that you have to be a good partner too. Once you take on the funding, so that's the main thing that you need to consider. But on the flip side, if you pick the right venture partner, you get a lot, right? So you could get a very deep network, that can be helpful to the company. You could get a team that has experience scaling a company similar to the one that you're building before, and can coach you along the way so that you don't make unnecessary mistakes and things like that.
Now, would you say that, because you mentioned the size of the companies and the growth potential as well, now would you say that if you're looking to get the venture capital or funding in general, you should be looking to sell? Or what are your thoughts around that?
You mean at the end of, like, once you've gotten to the end of the company's life? Yeah. So most liquidity events in venture are M&A. So a larger company, buys that smaller company for a lot of money, hopefully. But the kind of the holy grail is IPO, right? So initial public offering. where, the company gets so large and becomes profitable, that, you can now, offer shares of the company for sale on the public markets like a NASDAQ or, New York Stock Exchange. Those are the two preferred outcomes. Obviously, if there are other outcomes like, you shut the doors and you go out of business, that happens a lot too, right? These are very high potential, high risk initiatives. So, both paths are viable.
Okay, so we're breaking it down. Now I want to explore and expand on the different types of venture capital, whether it be early stage financing, expansion financing, and acquisition and buyout financing. So can you kind of explain what that means?
Sure. So, early stage or venture financing is, at the earlier part of, of a company's life cycle. So, for instance, you have angel investors or pre-seed investors that will invest in a company, before they have a product, right? It could be an idea, but they love the idea. They love the space that, this company is planning to build in, and love the team. And so they, so they provide, financing at that stage. Then you get to the seed stage where my company, plays most of the time. And here, you've built a product. You've either, already taken it to market, or you're thinking about taking it to market, or you're not thinking, but you're about to take it to market. And so there's there's a little bit more traction with the company at that point. And those rounds, are typically anywhere between as low as 1.5 million to like 5 million is what the company would raise at that stage. And then, the Series A, still considered early stage, but the company's a bit more mature. Now you've been in the market for a little bit. You've identified product market fit, and you're really, pouring gasoline on the fire, right? So company's really about to go in terms of generating revenue, or whatever the main, metric for traction is, for that company. It's just ready to go. And, those rounds, can range from as little as 3 million, up to like 20 million. Right. And then, beyond that, you start to Series B, I guess it's still considered, early stage, but, at that point, you're just continuing to scale, doing more of what you were doing before, but on a larger scale. And then once you get to Series C and beyond that, now you're into growth stage. So these are considered mature companies, right? They've been around for a few years, some even longer. What the company is. There's a lot of data to say, where the company came from and where it's likely going to go. And those are significant checks, right? Those are your 50 million, hundreds of millions, checks. And then there's M&A, as you said, and that's, mergers and acquisitions. So that's when, this company gets to the end of its life cycle, as a standalone entity. Another company that's larger is going to pay, some amount in cash and in equity, to acquire, that business, right? So the technology, the processes, the people, will become a part of this other company.
Perfect. So I know we're also like discussing money and investments and just like amounts. And I think when people are listening, they're like, oh my God, I'm hearing this for the first time, like what are these expectations that are placed on my company once I receive funding? So can you talk about some of the expectations when it comes to a company from those who are investing in these companies?
Yeah, it's going to vary, company to company, right? And business model to business model. But, the general, if we want to generalize it, your investor is going to want transparency. They're going to want information, right? What's happening, what's going well, what's not going well. Let's communicate freely and frequently and honestly. So that's kind of a table stake. And then you want things to be going up and to the right, right? So if we're talking about, the technology, we want to, we want that to be getting more stable, and better, right? If we're talking about product, we want to be improving on the product so that it better serves the needs of whoever the customer is. If we're talking about sales, we want to see that we're getting more customers and that we're generating more revenue month over month, right? Year over year, et cetera. So that, yeah, you just want to be, you want to be growing and improving in all areas. And if it's a venture backed company, you want to be, that improvement shouldn't be incremental. It should be significant, and happening at a rapid pace.
Perfect. And let's talk about, because I know you do quite a bit of work in bringing awareness to Black entrepreneurs, Black founders when it comes to access to funding, and being that we are Blacks in business and we focus on Black founders and entrepreneurs. I want to talk about your views on the state of access to funding when it comes to Black founders and some of the gaps that exist. How do you see, what are the current problems, and how do you see this changing in the future?
Yeah, I think the main problem is just there aren't enough Black decision makers on the investor side of the table, right? Human nature is to work with people that resemble you in some way, right? Whether that means they don't necessarily have to look like you physically, but you have shared experiences, right? So maybe you grew up in similar communities. You went to similar schools, you had similar experiences, right? It just makes it easier and funner, honestly, to spend time and to relate to those people. And so, because historically the venture capital business has been white and male, that's who got the majority of the funding, because that's who those investors best resonated with, right? And so now what we're seeing is that we're getting more decision makers on the investor side that are Black, that are women, and not only are we investing in white men, but we also relate to people that I grew up in Mount Vernon, New York, that grew up in similar cities to Mount Vernon, New York, that had similar life experiences, that are solving for challenges that I saw in my neighborhoods, in neighborhoods similar to mine, as I was growing up. So that's the thing that I think we can do and are starting to do to change this or level this playing field, is just having more Black decision makers.
Love that. So let's talk about some of the amazing things that you're doing at Mac Venture Capital. And I first want to talk about what led to the creation of the business and how do you think it sets itself apart from other firms?
Yeah, sure. So, Mac is a result of a merger of two venture funds. After I left Intel Capital, I created my first fund, which was called Cross Culture Ventures, and I built that business with Troy Carter. As we were building and growing that business and thinking about how do we scale up to a fund that would manage over 100 million in capital and well beyond that. It was about expanding the team, and so we've known another fund for a long time, a fund called M Ventures, which was led by Adrian Fenty, who was the fifth mayor of Washington, D.C., Charles D. King, the founder and CEO of Macro, the media company, and Michael Palank, who is a kind of seasoned operator and former talent agent. And we've been doing a lot of work with them over the years, and had been friends, and invested in similar companies and shared a similar philosophy. And so I just thought, what if we kind of combined our forces, merged our teams and resources together, and built a new fund, bigger, better fund. And so that's the creation of Mac Venture Capital. And so, what separates us is us, right? It's that team. I talked a little bit about my background. Adrian being a former mayor, spent 4.5 years at Andreessen Horowitz, one of the largest venture funds in the world today, and kind of a prolific name in the space. Charles King, probably one of the most successful Hollywood agents of all time, and then a successful CEO of a media company that creates movies like Judas and the Black Messiah, and a number of others. And then Mike, just having operated in the media and entertainment space for some time, you put all that together, you just get a wealth of experiences, knowledge, and most importantly, networks. Right? We're a venture firm that have very deep networks in professional sports, media and entertainment, government, both federal and local, Fortune 500 companies to some of the top startup companies over the last 20 years to global strategy and marketing agencies. So those networks allow us to really move the needle for our companies in a major way, as necessary. Through introductions, we've had large companies become the first major customer for many of our portfolio companies, to some of them actually becoming acquirers of those companies, and some being partners to them. So that's a Rolodex that we throw up against any other fund. And then we've all operated as well. So it's one thing to try to coach a founder or a CEO on building their business if you've never done it. It's a completely different thing when you do it from a position of, hey, I've sat in that in those shoes before. This is what happened when we did X. And this is what happened when we did Y. What do you think about that? Right? It makes for a way more meaningful conversation and a level of trust, between us and the founders. And then the third kind of pillar that we hang our hat on is storytelling. We all come from backgrounds where we can help founders and companies show up in as their best possible selves. And from a lot of research, we've learned that the way that you show up initially has an outsized impact on how large of a company you can ultimately become, and how quickly you can you can scale. And so being able to help these companies tell a story that really resonates with their audience is it's a superpower that is fairly unique to our company.
I love that. And I want to ask you, well, what makes companies attractive to you all in your firm? Like, what are some of the things that you look for prior to investing?
Yeah. So we're a generalist fund in the sense that, we invest across industries, across sectors, but we're also a thematic fund. And so our theme is, we call it cultural investing, which is basically taking a look at human behavior, right? So how are people behaving today? Where are they spending their money? What are some of the emerging behavioral trends that we're seeing? And the reason for that is, if you had a crystal ball and you can, look 10, 20 years out, and you can say, okay, people are doing this thing, they're spending time and money here. You're obviously going to invest in companies that are building solutions that fit with that, that future world. So our kind of hack at, having a crystal ball is is spotting these behavioral trends early, researching them, and making a determination or a bet as to which of those trends, those behaviors are going to continue well into the future. And then we go find companies that are building, what we believe is the future of the world. So any company that we invest in, they've got to, whatever they're building, it has to fit with where we see the world going in a major way. So that's one. Two, it has to be, and I mentioned this earlier in the conversation, a multi-billion-dollar opportunity. And you've got to be able to get there, within 5 to 10 years, right? So kind of that kind of scale is necessary. And then, we're obviously going to look at the people, right? And we want, what is special about you and your team, just generally speaking. But then what's special about you and your team as it relates to this business that you're building, right? Why are you uniquely qualified to create this thing? And do we believe that you can build a category leader in this space? And then, then there are other things like competition. Who else is doing this? Is your approach novel? And, can you put a moat around it? Can you protect the business? Those are, at a high level, what we're looking for. But, it's very special humans that are building things that we care about is kind of a shorter way of saying it.
Perfectly put. And I want to ask about, for those who are probably listening and considering going this route, what advice would you give for business owners to know when they're ready to seek funding, and how can they best prepare for it?
Yeah. The thing you can do to best prepare for it is build, right? Build and gain traction in your business. There's no better way to tell a story of potential success other than showing that you've been successful to date. So I would say building is the best thing that you can do to prepare. In terms of when you need funding, it's kind of what I said before, right? When you've gotten to a point where you can't build this thing anymore, you can't scale this thing fast enough without that venture financing. That's how it's time.
Perfect. And there's someone who's listening. They're like, I'm ready. I need to get access. So I want to talk about how can businesses get access to these firms, and just knowing where to look. Any advice on that?
Yeah. I mean, the internet, right? you can
maybe
find
building their network, building,
Yeah, no, but seriously, it's I think you want to do that internet research to find out who are the venture funds that have invested in a certain space, right? And then from there you want to kind of drill down to, okay, these 20 firms invest in let's call it e-commerce, and invest in e-commerce, and which ones of these don't have a company that I would view as competitive to my business, because most of the time venture firms are not going to invest in multiple companies that are doing the same thing. There's just ends up being a conflict of interest. And so from there it's like, okay, well, how do I get in touch with them? And that's where it can get a little tricky. Some firms will only talk to you if you know someone in your network. So that's when you go to LinkedIn or whatever, and you figure out, where's your connection there, and you try to get that warm introduction. Other firms like ours, we have on our website, there's a portal for you to enter your information about your company and add your pitch deck, and we'll look at it. We'll look at it and we'll get back to you as soon as we can. to either schedule a follow-up conversation to learn more, or to say, hey, we looked at it. Thanks for thinking of us, but it's not the right fit. We do that with everyone that submits their information to us. And the reason we do it is, one of the questions you asked earlier was, what was the question exactly? Gosh, I can't remember the exact question. The disparity between of Black founders, right?
Yeah.
One of the big issues there is access, and so prior to like the last few years, most entrepreneurs could not get a hold of venture investors unless they knew someone in their network, right? And again, if you're not in that network, you're just locked out.
Right.
And so, this is going to be true for us too, right? We're not going to know everyone. Everyone's not going to be connected to us in some way. And so we want to make sure that even if we don't know you and you're not in our network, you have an opportunity to put your project in front of us. Because just because you're not in our network doesn't mean that you're not building an amazing company and, a category leading or winning company, right? One of the things that we say at the firm is like, talent is ubiquitous, right? It's everywhere, but access to capital and opportunity is not. And so we want to try to do our part to change that, right? We want to provide access and do it at scale.
Got it. And you mentioned the fact that, sometimes you look at these companies and you're saying, okay, you're not a good fit, but just like you're making sure that they're a good fit for you, for business owners to make sure that these firms are a great fit for them, what are some questions that you think that business owners need to ask potential funders to make sure that they're a good fit?
It's a lot. So again, you want to do the work ahead of time, right? Qualifying these investors. So, do they invest at my stage of company? Is one of the first things. Do they invest in this sector, right? So, do they only do B2B companies, or do they do consumer? And if my company is a consumer company, I need to find the ones that do consumer deals, right? Then it's well, how do they work with entrepreneurs? Some investors are very hands-on, roll up their sleeves, and spend a lot of time with entrepreneurs. Others are very hands-off, right? They spend very little time with entrepreneurs. What's more appropriate for you? What do you need? What are the ways in which an entrepreneur or an investor supports a particular entrepreneur, right? Is it business development that you need? Is it operational support that you need? Is it introductions to customers and things like that? Like, what is it that you need to grow your business, and can that investor provide that level of support? And then it's as you get deeper, it's like, do you connect? Do you vibe with that investor? Is this someone that you're not going to mind spending significant amount of time with over the years to come? That's those are the qualifying questions, and the I'll leave it there.
Perfect. And I want to talk about some of the things that you are doing personally. I know you serve on the board of directors for a couple of companies that I have heard of, Kauffman Fellows Program, LISNR, and Blavity. What is your role as serving on the board of directors? Like, how does that work? And if you could just talk about that.
Yeah. So One of those is very different than the other two, right? So I'll talk about the latter two and a bunch of other companies. So, oftentimes when we lead investments in these companies, we join their board of directors. And that's more of a governance thing, right? Where, like, as I mentioned, we're going to work with those companies anyway, and we're going to work with them pretty closely. But being on the board of directors, we participate in certain governance related decisions, right? And we're also more likely even closer to the company than their other investors. So it's just a way for us to add more value and be like a real value add investor and an advisor. So there's that. And then, the Kauffman Fellows, that's a nonprofit, right? So I didn't invest in that company. I was a fellow myself, and, Kauffman, for those that don't know, it's basically a global organization that trains and helps to expand the careers of emerging venture professionals. So, venture professionals that are not yet general partners that are aspiring to become general partners. You may be one or two steps away from that, or you are a general partner and you're looking to expand your reach globally within the venture community. Like, that's the benefit of the Fellows program. And so I joined the board to, if it's going to be such a influential force within the venture community, and I know that one of the challenges for Black founders receiving funding is that there aren't enough Black decision makers. Well, here's a way for me to help bring in more Black decision makers, right? To grow, to grow our presence in kind of the venture environment and community. So that's why I do that. Other things are working with like HBCU VC, the Black Venture Capital Consortium, Pledge LA, on bringing in interns to start to teach them the business of venture, and Black and brown interns, and and giving them access to our network so they can start to to build their own network in the space, and again kind of build the pipeline and have them expand across the industry and solve this problem that way.
That is so beautiful. I love that. Starting them young, I love it. And I want to ask about any parting advice that I didn't mention, just based on your experience, that you would give to those who are looking to seek funding, or just like any advice.
Yeah. I think we said it all, but to, distill it into two things, build and drive as much traction as you can in your business before you go and seek venture financing. And, and then, know your customer, right? KYC, know your investor. Definitely do your homework, before you reach out to these venture funds. And don't be shy. Reach out to as many as you possibly can that fit, your business and the way that you're thinking about scaling your business.
Love it. And Marlon, as a leader, are there any favorite tools or resources that you've used that have helped you in your journey?
People. It's just identifying, folks that I think I can learn something from, getting in touch with them, and and then pulling as much out of them that I can, and then getting recommendations for other people to talk to. I mean, outside of that, like the internet has a wealth of resources, right? So that's kind of table stakes. But for me, it's like my career has grown because of the interactions and relationships that I've been able to build with, with folks that are in this industry, have been doing it for, much longer than I had, and have seen way more success than I have to this point.
Awesome. And what would you say your best risk that you've taken in your journey?
Betting on myself. So, I mentioned, working at Intel Capital, right? At Intel Capital, we used to deploy anywhere between 200 and 500 million per year into Series A, Series B companies. It's a lot of capital. There's a lot of prestige, with that came with that name at that time. And, making I was making a nice living. Making the decision to walk away from that and kind of start over and build my venture practice from the ground up was not an easy decision, but it was definitely the right decision. And I, if I had to do it over again, the only thing I would have done is done it faster and sooner.
That's good advice. And what does it mean for you to be Black in business?
To be Black in business?
Yes.
To just be, authentically myself. To a part of why I start my own firm is that I wanted to show up as my entire self everywhere, all the time. And that's that. Yeah, that's what it means to me.
Love it. And how can people, I'm sure they're listening and they're wondering, how can they connect with you best? And also, how can they support you and any other upcoming projects that you have going on?
I'm really easy to reach on Twitter, Instagram, and it's just Marlon C. Nichols. Outside of that, if you're a founder looking to raise funding, go to our website, macventurecapital.com, and the contact area, and send us your information that way. Those are the best channels.
Perfect. And I'll definitely mention that in the show notes. And Marlon, this has been awesome. So I thank you for being on the show. I've learned a lot, and I'm sure those who are listening have learned a lot.
No, it's my pleasure. Thanks for having me.
Of course.
Didn't you just love how Marlon really broke it down? I think that even if you aren't currently looking to seek venture capital, it's great to know what to expect in the process. I also love that I get to learn some of this information with you because I don't know everything. And as Marlon mentioned, this may not be the route for every company, so keep that in mind. However, some key takeaways from this conversation are that you want to make sure that you're building a solid foundation and tracking your success, because these are the things that potential investors do look for, whether they're traditional investors or non-traditional investments that you may receive. Also, if you're actively seeking funding, Marlon gave some great tips on making sure that the firm or investor you desire to work with is also a great fit for you. This is a two-way street, so you do get to decide ultimately. Okay, family, thank you so much for listening, and I hope that this information was valuable for you. For full show notes, you can go to blacktobusiness.com/73 and be sure to share this episode with someone in your circle who might also find value. Thank you again for listening, and chat with you next week.